Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tshepo Modiba, and thanks for joining me. Tonight, I'm joined by Dolapo Oni, Head of Energy Research at Ecobank. Dolapo, thank you so much for joining us on the show.
Thanks for having me as well.
2017, certainly from an oil price perspective, started out a lot better than what we've seen over the last couple of years. How has that filtered through in terms of the overall outlook for the oil industry within West Africa?
Okay, very good. And to be fair, I think it's been one of the it's been a bit of a positive story for West Africa. On one front, the low oil price means that oil services are a lot cheaper. So we're seeing companies actually venturing further offshore, trying to take some risk in deep water, shallow waters, just offshore West Africa. And you're seeing a lot of that investment going on around Mauritania, Senegal. We're seeing some drilling going on offshore Cote d'Ivoire, Ghana, Nigeria as well. We're seeing some appetite for field development, offshore Nigeria as well. So, and all that is filtering in because, it's a lot cheaper to engage drilling services. It's a lot cheaper to get, field contractors to site because where oil prices are currently. So you can negotiate a lot better. On the other side also, you can also see a positivity in the fact that most of West Africa, really only Nigeria and Angola are represented in OPEC. And in terms of cuts, Nigeria was exempted, so Nigeria could actually ramp up capacity, and we did that. We took advantage of being exempted to ramp up capacity. We're back to 2 million barrels per day, and we could potentially be up to 2.2 by the end of April. So it's been a positive one generally for the region, the way I see it.
Has currency played an effect in making the region a little bit more competitive?
Yeah, it has. It has played a major role actually, in a way that hasn't been altogether positive. In a way, it's attractive because it's a lot weaker. Look at generally across the region. In the Francophone zone, there are issues around how to decouple the francs there from the euro because the weakness is getting seriously to them. But also in Nigeria, you also have an FX situation where investors are interested in coming in to look at various opportunities in the country, but they are worried about the FX situation as well too because of the inability to get their dollars out of the country when they need to. So that has sort of created a bit of a stalemate in terms of the flows that we've seen into the country. So it's attractive in the sense that the currencies are weaker, but it's also a bit of an issue in terms of when you want to get your currencies, when you want to get your returns out of the country. So it's been here and there, the way I see it.
Okay. I guess the crisis, if you want to call it that, around the oil and gas industry over the last couple of years has created a potential framework for a reassessment for policy. Have we seen any of that? Have we seen a government looking to implement changes that will benefit the industry overall going forward?
Exactly. And that's typically what you find during periods like this. Governments start to look at how do we attract investors into the country? What sort of laws do we put in place to ensure that, we can get investors in? And we're seeing that happening. For instance, in Senegal, where there's been several successful well drilling appraisals, by companies that are exploring there, where the government is trying to draft a new regulation. They're actually working with various organizations to try and improve the quality of what they have to make the country more receptive. Because if you think about the size of the reserves that potentially could be offshore Senegal there, that's enough to attract a typical IOC. So at this point, they probably want to ensure that their regulations are well formulated, and that's what they're working on at the moment. We're expecting that to come out later this year. And then in Nigeria as well, there's more effort as well to try and pass the Petroleum Industry Governance Bill, which is actually before the Senate currently, but it's expected to be passed later before the end of April. Now, if that happens as well too, that's also in a step preparing Nigeria to ensure that they can actually do the licensing round, which they plan to have later this year as well. So there's a lot of focus on regulation. We've seen similar also in Ghana. I mean, last year, and then there are some new regulations that they've also sent to the Senate for to improve local content laws, to improve adoption of technology locally and all that. So that's also being considered. So governments are actually working on regulations. We could see some changes happen more changes happen before the end of the year.
Okay, putting all that you've said together so far, it seems as if you're leaning to a slightly positive outlook for the region and particularly with regards to energy.
Because again, oil and gas always provides investors an opportunity that typically other sectors wouldn't, especially for instance, in Nigeria, where you have the current challenges, which is limiting investments into other sectors, and primarily because if you invest in those sectors, I mean, you earn your Naira revenues, and then you have to convert them back into dollars to get them out of the country in terms of your returns. Oil and gas doesn't have that sort of situation where if you invest in your dollars, you're developing a product that will be sold offshore for dollars, and you earn your dollars outside the country, and then I mean you only need to repatriate what you need to pay your taxes, royalties, and so on, so back into the country. Yep. So typically that ensures that investors are happy to invest in those kind of sectors, and not just in Nigeria but across the region. So we're looking at investors. I mean, we're constantly talking to investors who are happy to look at opportunities in Nigerian oil and gas space, looking at Ghana, and then Senegal is gradually becoming interesting. We're seeing investors also looking at neighboring countries to Senegal. I mean, one of the Nigerian companies recently took up a stake in Guinea. In looking at the block that is being developed, there's been some oil shows on that block. So it's showing signs, and that's why again I'm positive about opportunities in the space in West Africa.
Okay, that sounds pretty good at a macro level. At the underlying business level, is this, I guess, positive theme spilling into individual companies? Are we seeing cash flows starting to pick up? Is that the picture right now?
Okay, yes, but on that viewpoint, no. Especially if you're speaking directly to Nigeria, we're not seeing cash flows pick up yet, not too strongly enough. Of course, production is back up for most, but for instance, one of the key pipelines that is down in Nigeria, which is a Forcados pipeline, is still not fully functional yet. So companies that are tied into that are not are not earning full revenues back yet. But more importantly, I think because the outlook is positive, and the fact that the pipeline has been fixed but hasn't started work yet, when it eventually does, cash flows should pick up. But what has really helped is the fact that oil prices have been relatively stable above $50 for most of Q1 2017. So that in a way is also a bit of a support to the outlook that we have. But in terms of current realities, it's still gradually, it's filtering in slowly, a lot slower than we would like.
So really at an underlying company level, as investors, you have to take, I guess, a mid to long-term view as opposed to looking at the short term.
Essentially, yes, that's what we're saying. And you know, I mean, I talk to IOCs often, and they tell you that part of why they do what they do in terms of investing in the economies where they invest is really because they take a pretty much long-term view with their investments. And so if you think about the typical IOC production profile, they try to ensure that they ramp up later on along the production profile when prices are a lot more stabilized or prices are a lot better. And that's what we try to caution the smaller middle-sized companies to also adopt as well, that look, you've got to keep on investing, you've got to keep on investing in your business just to ensure that, but more importantly, maintain a longer term view than you currently are. Stay in the business for longer, prices will stabilize and then cash flows improve. And so even for banks, what most of the banks have done is restructure most of last year and also ensure that until cash flows stabilize a lot better before, the companies are pressured to pay a lot more in terms of repayments.
Touching on, I guess, the banks and financing it broadly, are we seeing I guess appetite for funding projects within the energy space? Has that picked up a little bit?
No, it hasn't really, to be sincere. I mean, and if you're looking, at, let's say specifically Nigeria, the appetite is really low, and that's really because the banking sector is pretty exposed, very exposed to the oil and gas space, to the energy sector at large. Even if you include the power sector, the banking sector is pretty exposed. So appetite is pretty low. But instead, what we're seeing is companies are then trying to look at other sources of funding, and it's quite interesting because this is happening at the time when private equity is also beginning to have a stronger appetite for oil and gas, especially in West Africa. So you're looking at various groups backed by private equities trying to look into assets or taking over assets, even in around West Africa. Recently in Gabon, you've had Carlyle Group backing a company to take over assets from Shell, and then you also look at parts of West Africa as well, to where other PEs are making inquiries, looking at assets, not biting yet, but making inquiries. So clearly there's likelihood that we're likely to see some changes in how financing goes on in the industry, because it won't be driven more by the banks, but likely from equity point of view.
Sure. Okay, moving across, I guess, to East Africa, is the outlook as positive a picture as you've laid out in West Africa?
Yeah, well, I mean, East Africa it's a whole different dynamic, especially if you look at the fact that there's still some need for some investment in further appraisals in East Africa, especially in the key countries like Kenya, and Tanzania, to put a little more figures, to put a little more how do I put it, a little more depth around what is currently being developed there. So I think it hasn't attracted as much interest as we've seen offshore West Africa, which is really a more proven region. So you can see the likes of even Tolo are saying, look, we want to drill more wells, we want to spend more time appraising our assets and then developing gradually. So, but yes, there is some interest again from Asia as well for the gas. And if we're looking purely at gas, East Africa is clearly somewhere where there is significant appetite for developing the gas there. I think part of what has slowed it down again is because gas tends to be a very capital-intensive project to develop, especially if you're looking at monetizing it through LNG, which is what most of that region is also thinking about. Tanzania, Mozambique. So that sort of slowed down the progress on that front. But is the outlook equally positive? I'd say yes, maybe slightly less, but yes, very positive.
Perfect. Let's leave it there. Thanks to my guest, Dolapo Oni, Head of Energy Research at Ecobank. That's all from Buy Africa this week. Remember to follow me on Twitter. That's @Modiba_Tshepo. And send us your thoughts about the show using the hashtag Buy Africa. From myself and the team, goodbye.